Hey, what's going on, guys? Welcome to another video. So when you're choosing a method to invest with, there are so many different options to choose from. There's buy and hold, dividends, day trading, but the method that I'm going to outline today can blow all of those out of the water when it comes to performance. And what this method is the CANSLIM trading philosophy. And if you master this method and go into every trade thinking of risk before all else, you can achieve yearly increases of 15 to 100% of your portfolio. So what CANSLIM actually is an acronym, and what it stands for should be on the screen right here. And in this video, I'm going to outline what each letter means and how you can use it to improve your trading. And if at any point you find this video useful, I ask that you gently tap that like button down below. It's right there. Go ahead, do it. I would greatly appreciate it. Getting right into it, the CANSLIM philosophy was developed by William O'Neill, the founder of Investors Business Daily. And he created this strategy as he was just starting out as an investor, and he wanted to determine what made certain stocks, certain super performers, go on massive runs of 500% or more. And to do this, he looked into the past and analyzed different market winners since the 1880s that went on these huge runs. And CANSLIM represents the 7 common traits that he found could signal a stock to go on these massive increases. These common traits that William O'Neill found still apply to this day, and they present the best stock selection process that could help identify the next Apple, the next Amazon, the next Netflix, and could allow you to make significant amount of money in a short amount of time. So now let's go over what each letter stands for and how you can use it to improve your trading. The C in CANSLIM stands for current quarterly earnings, and the strategy identifies stocks with EPS change increases of 25% or more. And ideally, this EPS change would also be accelerating quarter after quarter. Similarly, the A in CANSLIM stands for annual earnings, and you want to look for companies that are showing signs of long-term growth. You want to invest in a stock that has had 3 years of 25% or more annual increase in earnings. I include both this and the shorter term quarterly earnings into my fundamental ranking scale. And it's one of the main things that I use to set stocks apart when I'm choosing my watch list. The N in CANSLIM stands for new, and this could be a new high, a new CEO, or a new product or service. Strong growth companies can increase dramatically when a new product hits the market and makes a splash. Think of Apple with the iPhone, or Netflix as it started the first successful online streaming platform. The S in CANSLIM stands for supply and demand, and this means that you should be looking for stocks that have little supply left while demand is suddenly streaming in. So you should look for constructive price patterns like cup and handles or long consolidation periods near all-time highs. And then you should make your purchase of the stock as it is coming through the pivot point on large abnormal volume. This will ensure a good supply and demand relationship. The L in CANSLIM stands for leader or laggard, and you want to be investing in the top tier stocks in the leading industry groups. Each bull market, a couple of these groups will be leading the rest of the stocks upward. And if you can identify these groups early, you can capitalize and make substantial profits. The I in CANSLIM stands for institutional sponsorship. These are mutual funds, hedge funds, large investment companies that account for 75% of all market activity. These institutions can't hide when they purchase shares, so look for abnormally large volume when a stock is coming through a pivot point. If you align your positions with theirs, you'll ride the wave upward. And finally, the M in CANSLIM stands for market direction, and you should never try to fight this trend. IBD's studies show that 3 out of every 4 stocks follow this overall trend. This is why it's so key to use technical analysis to determine the overall and also short-term trend of the indices. For the short term, you can use 30-day moving averages or a daily guppy chart. And if it is red, white, and blue, and they are above their 30-day moving averages, you're in a strong short-term uptrend. And if otherwise, you should hold off and wait for the overall market to turn up. If the market direction is poor, look for stocks building bases near all-time highs or even still making gains. These could be the next market winners once the overall market turns around. So here it is again what each letter stands for. And if you want to quickly know if a stock meets the CANSLIM criteria, you can use IBD's stock lookup system. If the composite rating is above a 90, you're in a pretty good stock. I also like Investors Business Daily because they frequently update the IBD Top 50 list, which is their picks of stocks that will do well in the market. And if you keep track of what stocks are currently on this list and what have been on it in the past, it's a great group of stocks to look for and sort through and build your watch list. Personally, I use MarketSmith and download information on every single stock on the market, and then I sort through that using my own personal algorithms, which are influenced by the CANSLIM criteria. If you're interested, I post the top 30 from this list every single week, so make sure you go ahead and follow me on Twitter. Thanks so much for watching, and please leave a like on this video and subscribe if you haven't already. See you guys in future videos.